Welcome back, listeners, to another episode of BizBlend, where business meets bold conversations. I'm your host, Sana, and today we are pulling back the curtain on a very controversial and really discussed corner of the financial system: bank issued alleged credit card debt. Now, our guest is Tommy Kilpatrick, who has spent years challenging the very legitimacy of credit card debt as we know it, listeners. Now, Tommy's research, legal challenges, and also personal experience suggests that many bank issue credit cards may not represent actual enforceable debt at all, but instead, it's a sophisticated financial structure disguised as lending. So, whether you are a business owner, finance professional, or just someone carrying credit card balances, today's discussion will challenge assumptions and spark some serious reflection. So, let's quickly get into it. So, Tommy, welcome to the show, and I'm, as always, honored to have you here with us.
Well, thank you for inviting me. Thank you very much, Sana.
Tommy, let's start at the core. Um, so, you are essentially arguing that what banks call as credit card debt, quote unquote, it isn't truly debt in the legal sense. So from a business model perspective, Tommy, do you mean that banks are simply running a sophisticated profit engine disguised as a consumer credit?
Yes, how this all developed is that I had written a book on health and healing. And then in 2004, I was given an infomercial contract and I was on the radio as a guest. So we were testing the market to see what would work best. And then about 6 months, I had to use my three credit cards to live on. And then one of the talents got in trouble with the FTC by making some false claims, and the government came down hard on him and the company. My contract was canceled, and I was stuck with $85,000 credit card debt. I realized that for my dad being a CPA and me studying to be a CPA, I figured out that the bank never had an invoice, so they didn't have a debt. And then if it's a loan, then they had to have a promissory note to create a loan. And so I took them to federal court and I laid it all out in my pleading. And the judge called me into court and he asked me some simple questions. Do you have a credit card? And it made me look like a fool because I couldn't explain it from the beginning. And then he threw my case out. But about a month later, I didn't have it on my credit report. So even though I may have lost in court, the bank deleted out my credit report. So there is a way that you can nuke your credit card debt.
I mean, uh, that's, I mean, your example, Tommy, it kind of deduces that how banks they borrow from retirement funds or they create asset backed securities, and then there are gift cards, cashbacks, and all that stuff disguised as credit cards. uh,
Yeah.
so-
Uh, well,
mm,
I'll kind of explain it to you too, is that I am a doubting Thomas, so I don't expect you to believe what I'm saying. This goes counter to everything you've been told. So I have some show links in there, but I'd like you to send this podcast to your CPA and have them verify with you that what I'm talking about is absolutely true.
mhm,
So law is language and language is law. So if you say you have a debt, you have a debt and you got to pay it. Now,
mhm,
we watch on TV, there's a bank robber, and the news says alleged. So if we use the word alleged, now we force the bank to prove that they actually have a debt against us.
right.
So, and there are true credit cards. This is not a get out of debt scheme for anything and everything. This is only for a very specific kind of credit card, like you're kind of mentioning there. So a
Mhm,
true credit card is where if you went to a tire store and you bought some tires and you didn't have any money, they could say, oh, why don't you apply for the in-store credit card and see if you are accepted? And you are. So you get the tires put on your car and you drive away without paying. You get a statement at the end of the month and you pay it, you're fine. If you don't pay it, you still have an outstanding invoice that's not paid. So that's the difference. So what you do is you look on the back of your card, and if it's like an Amazon card or a Walmart or kind of a store card, if it says issued by Bank of America, Wells Fargo, Deutsche Bank, it happens anywhere in the world, then
Yeah.
that's not a true credit card. And that's the one you can challenge. So what banks do is they're involved in loans. So if you go into a bank without any money, then you want money to come out, and that's a loan. So what you do is you apply, and if you're accepted, then you go back, you fill out loan documents. You have to prove that you have an income. You have to have a collateral like the house or a car. And if you don't pay, they'll take it away from you.
Yeah.
So then what you also have to do is have a credit report and a credit score determine your interest rate. But the last thing you do is you sign a promissory note. There is no signing a promissory note with your alleged credit card.
Yeah, that's true. I agree. I agree with you. And I think that's something so many of us we miss it out. Um, and Tommy, your example, it I mean, it's the entire credit reporting industry, debt settlement companies. Then also, let me take the IRS into the consideration. They benefit from consumers believing that this debt is real. So, how intertwined is this alleged structure with the broader business ecosystem, Tommy? And who stands to lose if consumers they start challenging these debts?
Yeah. And what banks do is they try to get you as a customer. All right. So the years ago, they used to give you a toaster or a wall clock. And I even had responded to an ad saying, come into our bank, deposit $25, and in 90 days, we'll match it. I did that on day 91. I went into the bank, withdrew my money, and closed the account. Now,
Mhm.
to ask your question, Sandra, did I rip off the bank?
No,
No.
no.
Did I steal from the bank?
Oh, no.
No. They made an offer and I took it and I walked out. So it's the same thing when they send you a gift card. That's what you were kind of mentioning in the beginning, is that the banks try to get you as a customer. So they will send you a $500 credit card. You think it's a credit card, but in actuality, it's a gift card because they gave it to you. So what do you do with a card? You use it, you buy things with it, and you walk out of the store and the clerk at the doorway says, wait, did you pay for this? And you have a receipt that proves that you paid for it. So you'll never get an invoice from that store. Now you think you're going to get an invoice or a statement from the bank, and that's for your credit card that you think you do. So your checking account will send you a statement every month, but that's not a bill, and neither is this. But the bank lied to you. They fooled you into thinking that you actually owed money. And what you did is a good thing. The right thing is you paid your bill, but you don't realize it was a gift card at the beginning. So once you send money to the bank, that's actually technically a loan to the bank. Anytime you take money into a checking account or a savings account, that's a loan to the bank and that's your money. So that's how all you have to do is solve this whole problem is by writing a letter to the bank asking to close your free checking account associated with that card.
I mean, Tommy, legally speaking, how is this strategy holding up when banks push back? I mean, mm, uh, do, uh, uh, do you see or are we seeing any cracks in their ability to enforce these debts?
Um, I'm not quite sure if I understand exactly what you're saying, but I think that are there any cracks in this? And it's very simple. It's not some kind of crazy idea. It's just basically sound accounting principles that
Yeah.
if you purchase something from a store and you don't pay them, they have an invoice and they have the date, the products you took out, things like that. So you owe that money, but the bank is making $23.04 on average per card holder. So if they have 1 million card holders, they're bringing in $23 million on fees, but it's for a free checking account. So they're committing fraud. I'm actually maybe the first person who's ever revealed this. And I was thinking about that today. I can't be the first person who ever thought of this, but what they do is they have you sign non-disclosure. So when they do settlements with you, they must be quieting people somehow, some way, because all you got to do, send a letter to the bank. But it's advantageous if you had your CPA also write a letter that says that you did not ever have an invoice and you cannot produce a loan because there's no promissory note. And again, you don't need to believe me. It's in the show notes and you can verify this yourself.
Well, that absolutely makes sense. Absolutely makes sense. And for business owners who carry both personal and business credit cards, are they equally vulnerable to what you are describing, Tommy? I mean, and does this apply to both type of credit cards?
This works for any bank issue, and then when we say alleged credit card, because we make the bank force them to commit, to bring the evidence, which they don't have. So I have court papers and court documents, which are much more powerful if you want to solve this problem much quicker. So once the bank sees your complaint and the discovery and the injunction, that's a secret weapon I have, is we file an injunction and they are given 30 days by the court to bring to court the evidence of a debt. And that would be an invoice or a copy of a certified promissory note, and they don't have it, and they will be in contempt of court. So once they realize that we know their crime, all they do is they click, and it's off your credit report, like what happened to me. And you have no case because there is no more debt. And that's the whole point, is they don't want this advertised.
Well, yeah.
And then on the other side, you're saying about the cracks. Well, what's the downfall? Okay, look at it the other way. What would happen if you didn't do what I'm suggesting you do? Well, you can declare bankruptcy. Well, that costs money and takes time, and it's on your report forever. It's not on your credit report forever. But then again, if they ever ask you a question, have you been ever in bankruptcy, then you have to say no. Well, yes, you always have to say yes. But so this way here prevents a bankruptcy from happening. And the only downside is that you get sued. But since the bank knows, you know to countersue them with the request for the invoice or promissory note, they don't have that. And so you'll win. So I don't see the bank ever pushing back because they will lose in court, spend a lot more money with their attorneys to lose. So yeah, I don't see a downfall in this or any kind of of crack in it, what I'm suggesting. I've done it before and I've done it for thousands of other people.
Yeah, yeah. Well, I'm just to make it more nuanced, I thought let's bring that particular perspective as well, Tommy. Um, so uh, from a purely business ethics standpoint, um, couldn't one argue, Tommy, that consumers willingly use the cards, make purchases, and benefit from the funds? I mean, isn't there at least a moral obligation to repay even if the bank structure is questionable?
Yes, one would think that if you're coming from the bank's point of view, which is fraudulent. I didn't explain further. When you got the bill, you were a good person, you were thinking, and you mailed a check off. When you mail the check to the bank, they deposit that in your free checking account. And from every purchase subsequently, it's been with your own money. So you have been putting money into your free checking account at the end of the month, and then you've been using it with that card. Well, technically, that's a debit card. It's not a credit card because they cannot issue credit. The only way they can issue credit is if they're a merchant giving you goods or services and agreeing that you don't have to pay them now, you'll pay them later.
Hmm.
So that is a true credit card. So if you say credit card, they have to be a merchant, which the bank is not. They had to give you something and you did pay for it, and they have an outstanding unpaid invoice, which they don't have. So morally and ethically, you are properly, in the proper moral sense, is to close your checking account that's associated with that card.
Hmm. Okay. Okay. That's a good one. That's a good one, Tommy. Finally, before we wrap up, if our listeners they would like to connect with you, and get a hold to that letter, and how to start with this, what would be the best way?
Oh, sure. In the show notes, I'll have my name, Tommy Kilpatrick. Tommy A. Kilpatrick works for Facebook, and there'll be an email there. And I offer a free 15-minute consultation. I've written a book, and it's available everywhere in the world. And it's called Forgive and Forget: How to Nuke Your Credit Card Debt. And if you do a free consultation, I'll send you the book for free. I really want you to help you get out of debt. And what I'm really looking for, best client is a company that is about to go bankrupt, and let's say they've got $500,000 of alleged bank issued credit card, and their board of directors have all maxed out their cards too, trying to keep the company afloat. So that's about $1 million of alleged debt that I can eliminate probably in about 45 days or less by just simple clicks by the bank and my legal paperwork.
Yeah, absolutely, absolutely. It's just being mindful more about the system. Uh, could be the loopholes, or the actual logic behind everything. So it's not like we are trying to cheat the system. We are going the right way.
They're the criminal, and I will also put something in the show notes there too. There was a man in New York, and of the New York uh, State Attorney General who committed crimes, and he revealed it. And so, don't shoot the messenger. I'm just the guy who is revealing that the banks have committed a big, huge fraud worldwide, and it comes to be about a 1/4 of all of their profits comes from this free checking account that they get you to pay interest and late fees and annual fees and overdraft fees and all these kind of fees on your own personal free checking account. So that's the wrong thing that their banks are doing.
Hmm. Agreed. Agreed, Tommy. Great. So I'll make sure to mention all the details in the show notes for our listeners. And thank you so much, Tommy. Many thanks to you for giving us a lot to think when it comes to how modern banking constructs consumer credit and how individuals they can push back. So thank you so much.
Yes. Thank you.
And listeners, that's a wrap for today's dive deep into the complex and frankly provocative world of alleged credit card debt. As always, BizBlend aims to explore the business issues from angles many don't dare to touch. And with Tommy, it really looked possible. So with any financial strategy, always consult your own advisors before taking any action. Don't forget to subscribe, share, and keep questioning the systems we often take for granted. And to connect with Tommy and check out all his resources, refer to the show notes along with this episode. Until next time, stay sharp. Thank you.